Well, first of all, I'd like to just say thank you to Gavin, the team, Jim. Thank you for hosting the event. It's actually been a pretty big dream. 2 years ago, had you told me I'd be doing this, there'd be I would not believe you. But what I wanted to talk to you guys about really was something that a customer brought up. And there was 3 points that he brought up. Now, I'm assuming most of you guys here are TradeGuider customers. You guys own the software. Is there anybody who doesn't own the software yet or is not a member of TTM? You guys are all customers. So you all basically decided VSA is the methodology that you guys want to use and employ, correct? Have you all read Tom's book, Master Markets, Trading in the Shadow of the Smart Money? The last part of that sequence, which is what a customer, dear friend from the trading room said, there's 3 points. Number one, you have to decide, is VSA for you? You really have to say, all right, I'm going to undertake this challenge. I'm going full bore into VSA. I'm going to learn all the ins and outs. Number two, you got to educate yourself and read. And the last part of it is you need to be trained. Because anybody can get a set of tools. I can give you a set of tools, a hammer, a screwdriver, and say, go build a house. But if you don't have somebody there watching you and helping you along the way, you may have something that resembles a house, but if it's not built on solid foundation, if you're not rooted and grounded in something that works, you're building something that's going to eventually fall apart. And that's really kind of what the dream of the trade room was. We wanted to, number one, not spoon feed any traders. We're not there. We weren't there to call a trade live and say, you got to buy here, you got to sell here. We wanted to show you guys live the principles as they're coming into the market, explain to you supply coming in, explain to you distribution, accumulation, what to look out for, and how to take advantage of those opportunities. And we've done it over and over. We're running the trade room every single day, Monday through Friday, 1 hour in the morning, 1 hour in the afternoon. Originally, it was 3 hours in the morning and then 1 hour in the afternoon. And we've since streamlined that. As you guys know, 3 weeks ago, we had to put the trade room on pause, which is something that we're working towards possibly by the beginning of the year. I don't even know if I can make public comments about it, but we're going through the process of getting fully regulated, registered, and licensed here in the States. So we hope to bring that service back to you with the Skype room, the group, the community that we've built. I've spoken to 1, 2, 3, 4, 5, about 5 or 6 of you since last night. We had dinner. I was speaking to one of the guys in the room. I feel like there's something that's still quite not clicking yet. The principles I think are pretty clear. Gavin hammers the principles home every single time. What supply looks like, what demand looks like, what no demand looks like, what selling looks like. But from what I hear and what I'm seeing, you guys are here for a reason. It wasn't to meet me. Maybe it was to meet Gavin. I don't know. But I'm sure there's something that you're still saying that there's a key missing to your trade plan, your trade journal, your trade management. I'm not sure. Is this ringing true with anybody? Anybody at all? No? Just one guy? The rest of you are liars. I'm just joking. And that's kind of where we come in, and that was why we started this trade room to be able to educate you guys on the principles, not in hindsight, not in what if scenarios, but live, and show you guys how to take advantage of those opportunities, which I'd love to do now. I don't know if I can connect my laptop to Gavin's.
It's broadcasting on the webinar, but we can recruit all of that.
Do you guys have any questions regarding the methodology, regarding the principles?
Well,
I don't want to keep going.
There was a question on the internet.
Yeah.
So how long did it take you to become totally proficient and, in effect, become a full-time trader? This guy wants to give up his day job, right?
Yeah.
And how much effort did you have to put into it? I know we've improved a hell of a lot since with some of the tools.
The tools that, and I get asked this a lot, I've talked to hundreds, dare I say thousands of traders in the 2 years that I've been working with TradeGuider and with Gavin. And that was one of the main points of starting the trade room. There was a lot of questions. How do I progress from my day job? I want to become a full-time trader. I really want to take advantage of, trading 20 different markets. So out of everything that we've taken, we're trying to condense all that material into the most simplest, easiest way manageable. You have the tool. For me, personally, I'm a little thick-headed. You may want to ask, probably confirm that with my wife or my mother. But it took me 4 years, between 3.5 and 4 years. That was what really, the process that I went through of, well, what does supply look like? And how do we wait for changes of behavior? And where do we place our entry? And do you take it as the market's breaking down, or do you enter on the close, or do you enter on the confirmation? Where do I put my stop? Where's my first target profit? How do I exit? Do I trail? Do I not trail? There's a lot of factors involved in trading. And are you guys trading? Is anybody still on sim, or is everybody trading live?
Yeah, is everyone trading real money here, or is it anyone simulated still? Don't be worried if you're not. Yeah.
So all of you here are live traders,
yeah.
correct?
Yeah.
And there's a reason why you're here.
Yeah.
You can voice those opinions or those questions. Now would be the appropriate time. I know it's 3 p.m. It's late in the day. I'm surprised you guys all have the attention span that you do. You're all traders.
At the end, some people don't like to talk in audience things. This is why we say we're going to have a networking thing towards the end. So we stress that. Take us to one side and say, this is the issue I'm having. Because generally speaking, I mean, Darren, your colleague, he picked it up quickly, but he was in Afghanistan in an army base.
Yeah, he had nothing else to do. He was stuck in an army base in Afghanistan. All he had, sorry if Darren eventually watches this, but he had nothing else to do other than watching the markets all day long, reading Tom's book. I think he said he read Gavin's book 7 times or 10 times.
Yeah.
I don't have the attention span. There's nothing else. This is the bear market. This is a naked chart. This is how the markets move. This is what drives the markets. Learning how to read the market supply and demand using volume is, to me, far and above anything else. So if you guys are using any other indicators, I would strongly recommend go back into Tom's book, go back into Gavin's book, really study all of the little minutia, all the details about what that really means to you in your markets. If you're trading crude oil, if you're trading gold, if you're trading the currencies, there's gold in those books. And I'm here to answer your any questions.
Well, I've got a couple of questions because I think, so why do you think it is then that if this is so good, not many people are teaching it? Because there's obviously Gary, there's David Weiss, there's probably about 4 or 5 people in the world now that we would consider understand Wyckoff and volume. It's becoming popular.
It's becoming more popular. But I got to say, when I started reading on technical analysis 20 years ago, I've read through all Steve Neeson. I've read through John J. Murphy, the quote-unquote Bible of technical analysis. They cover volume and price in glancing. In a bull market, volume's going up. In a bear market, or in a bull market, you got increasing volume up, decreasing volume down. Vice versa in a bear market. But they don't explain to you that, can we all agree there's a little bit more involved than markets go up on increasing volume and markets go down on decreasing volume. There's market context. There's phases. What phase of the market are you in? The market's a fractal. If you're in the 1 minute, the 5 minute, the 15 minute, the 1 hour, the daily, the 4 hour, the weekly, they all tie together. How do you know when you're going into a trade on the 5 minute that you're not actually into supply on the 4 hour, the daily, or the weekly? You don't. It's taking a step of faith in believing that the system's going to work, and it's having a trade plan that is going to help guide you and keep you safe. These markets are risky. Let's get that out right up front. These are the most risky. These are the riskiest, most leveraged markets that you can trade, futures and derivatives. You have to have a strategy moving forward that's going to protect you in case of a severe move against you, and that's using proper stop management. What's a proper stop management? Nobody covers that. Where do you place your stop? When the market starts moving in your favor, what do you do with your stop? How do you trail it? How do you know when the market's made its move and it's over? These are topics that don't really get discussed quite openly, and frankly, I think because a lot of people don't understand. They don't know the real mechanics behind the market, and have come up with a simplistic view, a simplistic approach to applying it to individual traders like yourselves.
I think that one of the difficulties of this, when you talk about stock management, the way we decided to show this at work was to have them run a live trading room with a small account and show where, on a small account, right, you use a very tight stop. But you see, we've got some traders that come to our seminars or in the trading room, they're trading $10, $20 million. So if you're telling them they've got to use a 6-tick stop, I'm using a 170-tick stop. I don't know how to call everyone. And he said, look, you're great. He said, but you're never going to be able to teach everyone to be exactly, because we're all human beings with different account sizes, different risk tolerance levels. So don't try and teach stops. But what you can do is show traders running live, like I teach where my stop was, in that Aussie dollar trade, I have 17 ticks of stop loss. So I had $170 at risk to make $100, but I reduced that risk, as we all saw, quickly, right? And that's your strategy, same thing. There's no, if the market gives you a trade that's running, always remember, even if you got stopped out for break even, it's a break even trade, you've got to pay a commission. So what? So what? There'll be another opportunity. And some days the markets do like they're doing today. Flat. Hardly anything. Flat. And it was good we managed to get a trade off. But you'll get other days, and we've had them together trading and with Darren,
huge.
Where the whole thing
is blowing up.
Has been going up. So let's talk about some of your favourite setups then, because you're trading this every day, right? We've got a lot of different types of setups, but I mean, it's going to be obvious to say yes, end of a rising market's a good short, and bag holding's a good place to buy, right? I think we can park that. There are other principles at work that, in a downtrend, for instance, one of them, my favourites on here, in fact, you can see it, the trap up. I mean, that is just. So what are your favourites? What ones do you like to trade? Let's start with downtrend. So you're looking for negative trades. You're looking to short the market. In the room, what type of trades are you looking for? What's the key principles?
The way that I approach, I think it was Gary, both of you guys were talking about context. You have to have the overall picture of the market. Where are you? If you take a very narrow look at a 5-minute chart, you're not going to get where the major levels of resistance and support are. I personally, where I'd like to trade are around the levels of support and resistance. You may want to call them hinge levels. You may want to call them an edge. That's where I'm looking for key principles to arrive. I'm also looking for entries where the energy came in. Where did the buying come in? I want to see that level get tested. I want to see how the market's going to react once we get back into that level. Once we get back into that level, I reduce back down to the smaller time frames. If it's on the 5-minute, the 3-minute, the 2-minute, or the 1-minute, and then I'm looking for a change in behavior. Once I see that, that's when I'm feeling comfortable about pulling the trigger. Prior to that, it's for me once you've gotten the climactic volume coming in and the market's pushed away, you are, for me, that's not the area that I like to trade. I like to trade within that climactic volume. I see the big volume come in, the market reacts, you get the initial bounce or the initial drop. Once we come back into that big volume, that climactic volume, whether you're testing, whether you're up thrusting, that's where I'm looking. I'm looking for the rejection of the climactic volume to trade. And currencies, we'll trade off the 1 hour, the 4 hour. Very rarely trade off the daily or the weekly. For me, it's a lot easier to trade using the 1 hour, the 4 hour. Crude oil, we trade based off the 5-minute. We trade off the 1 hour and the 4 hour as well, but not as often on crude oil for the 1 hour and 4 hour, mostly on the 5-minute. Crude oil to me is the market that speaks. I mean, if you've been in my trade room, you know I'm all about the crude.
What's the current contract on crude? Because I don't trade that.
December.
Yeah, is it V or Q?
Z.
It's the Z contract, isn't it? Yeah, so I need to roll over.
Now, in the last 3 weeks, full disclosure, I've been doing nothing but reading, studying, and all that. I haven't even looked at charts until today.
Yeah.
But I'll be more than happy to. I think in this environment, a workshop, especially being so small, it's a great opportunity to help fine-tune whatever little kinks. If you're saying, look, I'm I'm identifying the entry, I'm identifying the opportunity, I'm just getting stopped out before the market makes its move. Because
Well, I'm going to come to this. This is today's price action and yesterday's price action in crude. Now, I believe there was an inventory or something. There was some news on this.
Yeah, there was a crude oil inventory that came out at 7:30 New York. I'm sorry, Pacific, 10:30.
It's going to be in here. It's going to be in here, isn't it, somewhere?
Central.
Yeah. So it's going to be around.
You're on UK time, so I can't.
Yeah. So it's around here. It's around here, but it's in. It's. Yeah. Okay. We'll have a look at that in a second. Yeah.
Scan through the. So these are one of the. Okay, so this is the 15 minutes. Let's start off with the daily.
You might have to put that. You want the Z6, don't you? I haven't put it up there yet, so we might have to create a chart for the daily.
Daily. Chart settings.
Just roll it over. Yeah. Yeah, we're at a key point now, right now on the. There we go.
So we just tested. Looks like we saw a bit of a shakeout test. 2 days ago, on the daily. We're seeing some nice increasing volume as we push up higher. If you're looking at this, you would say, yeah, Crude oil looks bullish. Crude oil looks like it's going to head higher. I would recommend, if you're trading the daily, look for the levels of the climactic volume levels and look in the background to see where we're trading. You can see a prior top here to the left back in June. Looks like June 9th. We got a prior top. So there's going to be a lot of resistance. There's going to be, you would expect there to be a lot of energy to be able to push through that prior top. And I want to see the market confirm its upside bias by pushing through that level and then looking for testing, then looking for no supply. That's what I would be looking for. Prior to that, you had climactic volume today or yesterday heading into that zone. That could very well be distribution coming in. You don't know. So I would prefer to see breaking through. It's the old adage, right? You want to buy at tops or you want to buy at bottoms? You want to buy at bottoms. Well, we're at a prior top. So would you be buying at a prior top?
Yeah,
I would. I'd be waiting for the breakout above that area, looking for the low volume pullback. Now, what's interesting on crude is we have a pretty key level a little bit further back. You can't really see it on this chart, but let's go settings, continuous. Okay.
It's a bit slow, the internet. It may take a couple of minutes to load it.
There's a pretty key zone on crude. I'd have to
just let it load up. It'll take a while.
Yeah.
Put the 15-minute back up because that's something I just wanted to talk about here. You can see yesterday, I mean, if you analyse that chart, you can see that although the news was today, professional money were positioned yesterday. That's very common. They probably already knew what was in that report.
Now, you can see the sell-off in crude yesterday, right? A lot of volume came in beginning at 8:30, right around that time. You can see where the selling came in.
Yep.
Ton of selling. Great. I'm looking for the reaction back into the level where the selling came in the form of a no demand. As we approach that area on the 15-minute, I don't trade the 15-minute, but if I were looking at this and it was a 5-minute, I'd be looking for the no demand, the rejection back into this level. As you can see, when we're approaching that zone, we start seeing increasing volume. So based on my criteria of needing to see rejection back into the level of high volume, does that meet my criteria for a short? If this is truly weak right here, if all this volume that you've seen in the background is giving you the bias that crude oil is weak, and we've pushed down below that level of volume, right? Once we come back and revisit that key level, we got a prior swing low, and we're right around the 50 of that move down. Is volume drying up in the zone as we approach? So no. For me, that's not a viable short. As we correct, what happens to the volume? It goes down. So in a bear market, you should have decreasing volume up, increasing volume down. This is where the principle finally comes in. What do you have happening on the up bars? You got increasing volume. What's happening on the down bars? Is that indicative of lower prices? Probably not. I wouldn't be trading that for a short. As we reapproach that key level to the prior, now you have a prior top right here. Let me erase this.
Yeah.
So now you have this prior top right here. As you're approaching that prior top here, what's happening to volume? Again.
Yep.
Does that meet my criteria for a short? No. You get a test, and what happens? In the level where you would expect there to be weakness, which is right here, what did we finally see show up?
Central absorption, I would have said so.
It's the true hand is coming in. So now moving forward, I'm not interested in trading as the market's pushing up. I want to see the corrected move. So just like I would be expectant of seeing weakness in this level, I'd be expectant of seeing strength back in this level to the right. 50, 90, 51, 50 and change. Does that make sense? So it's not a matter of, okay, we got testing, we got no supply, we got testing here, we got testing here, we got testing over here. There's tests all over the place. If you start looking for tests, you're going to find a lot of tests. And the big mistake that I would make when I first started was I'd see green arrow, I'd buy it, and then I'd get stopped out. And I was like, what the heck's going on? And I burned through a lot of accounts. I lost a lot of money, a lot. I've made it known in the public trading room. I've lost a lot of money. And it's by learning these things, going back and saying, I'm not making money. I keep losing. Why? I'm always looking into the why am I losing money? How can I change this? Obviously there's an efficient way to make money, and I'm not doing it. And it's coming up with kind of that reverse thought process that helped me identify, okay, what are the key levels, and looking for the principles to arrive in those key levels. Now, you're still going to have risk. you're still going to have to risk money to make money. But now, once you've entered the market based on key principles, for me, my risk tolerance is I'm a lot more likely to take a trade once it's met my criteria. That makes sense? So if this was a 5-minute, again, I'd be looking right around the 50, 80, 50, 70 level for some type of climactic behavior. What do I want to see tomorrow? I'd like to see a massive markdown, big widespread volume, not taking out this key level, coming down, maybe pushing below, closing right back into it, and then as we come back and test that high volume, I want to see that volume dry up, and then I'll be taking that long, if this was a 5-minute chart. Make sense? Questions?
Any questions on that?
I love crude, so if you guys want to talk about crude all day, I could sit here for hours and talk to you guys about crude.
Abraham, do you
yes.
mind erasing your drawings for a second?
Yeah.
And then can you humor me where the, it looks like an absorption volume.
It's it.
Yeah. That's 5 minutes, right? Can you draw a horizontal line on that close?
On here, yeah?
Yeah.
Tools. There you go.
Okay, and now let's go back. I want to see where it,
Back.
It's gone off the screen now, but yeah.
yeah.
It's no price action to the left.
It keeps failing every time it reaches that. And then right now, where you were saying, you know, the volume is decreasing and it's running sideways, it keeps testing that little area. It keeps testing where it closes the climatic action.
I suspect tomorrow that bar will be quite important. But remember,
Personally,
weakness
for me,
doesn't...
I would personally,
Yeah.
I would not be taking trades at the top of that climactic volume bar.
No.
Not for me. I want to see reaction back,
Into
where the
the-
energy, where can you guys spot on the chart, where did the buying come in? Where did the volume, where did you see the volume actually make an impact on all the selling that came into the back? Or is it? Is it this volume right here as we mark up right into weakness? That to me, that could be very well be supply coming in and all of a sudden the market's going to break. So that's not indicative to me that there's enough energy pushing above the selling. I want to see buying take out the selling, and then as we come back and we test that buying, that energy, I want to see the principle in the form of stopping volume or selling climax, followed by a test, followed by no supply. Once I get that, I'm much more likely to enter a trade because now I have an area that's defended. Now I know there's buying that came into the specific area, there's strength. We've seen climactic, we've seen the stopping volume come in, we've seen all the retail volumes get stopped out. And then when we retest on low volume, to me, that tells me that selling is right. Now I have the green light to be able to execute.
Yep. I mean, crude oil is quite a difficult market to trade, to be honest with you. I know we've got a couple of people who trade it, but it can move very, very violently. This is why, I mean, you don't trade crude, do you?
Right.
You're trading it, yeah. Okay.
Mostly the S&Ps. I would say 90% of my trading is in the S&Ps, but a good 10% will be in crude too.
Yeah, you like it. Yeah.
I probably make a trade a week in there.
I mean, you got some principles here, and you can see they shake the market out prior to any news event, and then it gets tested. So the principle's there, and over here they test it again. Always remember the principle is if you see very high volume, there's still supply present in that bar. You've still got sellers in that bar, and they're not going to want to take the price up until they've seen those sellers exhausted, which is why we say you look for low volume. And in this instance, it was found here, and it did move up for about 4 hours. It was longer than that, in fact.
But I think Abraham's right in this. That area in there is where all that high volume is coming down and going up. Is a key area.
There's a key zone, and they reveal their hand over and over and over. You just have to pay attention. Where did the energy come
chart for a second.
Back. CLZ daily.
There you go.
So we have resistance just overhead.
Do you want to come here, Gary, because they can't hear you? Sorry. I know you want to sit down, but
Let me show just the background a little bit, what I was talking about earlier before the chart finished loading.
yeah.
So you have an area in the immediately right above us. You guys see these lows back here where we went into I don't know if you want to call it a phase 2. There's markup, there's distribution, sell-off, right? Can you guys see the clear congestion sideways breakdown? There's a key level right in the zone. You got prior lows, you have a lot of energy, you can see the volume coming in where we broke away from all of this congestion. This level, if we come back into that level and visit and we start seeing climactic buying, large volume up bars that get rejected. Kind of like the Canadian, right? We got huge up thrust. Pulls down, comes back, revisits that same area, you get rejection of that ultra high volume. That to me is a green light for a short. Now whether the daily's caught up and the time frames are aligned or not, those are a little bit more of, for me, playing the edge. You're playing where the major activity is in rejection of that big volume. Because I want to trade as close to where the big volume is. If big volume's $2 below us, I'm really leery of taking a trade as we've already pushed above 3 or 4 levels, because I know that the bigger time frames could correct. I'd rather buy on the stopping volume, the selling climax, wait for it to get tested, and then take the next easiest route, personally.
So look, what's this telling us about crude oil, do we think? I mean, are we going to come back up to this 64? Do you think?
That would be my sense of this chart. You've got resistance in here along this line here.
Yeah, right. That's right along there. And look, we've got massive volume bar here.
Right.
When was that? What happened there, Abraham? Do you know? That was
on the 4-hour hourly. There was just huge volume. To be honest, since I've had the screens off the last 3 weeks, I don't know what.
No, okay, don't worry.
Market was pushing up there.
Yeah, it's pushing up. It's attacking this old area to the left.
Yeah. Now, are we above that climactic volume, or are we below that climactic volume?
Let's have a look.
We're above it.
We're above it. Yeah. So if we're above all that huge inordinate amount of volume, what is that normally indicative of? When you have volume coming in and the market pushes away from that level of volume, what is? Yeah. It should start processing. Okay, if that was weak volume, we should have gotten accepted down below.
So we're right.
And then you're looking for rejection back into that big volume.
I mean, look
now you'd be looking for acceptance or further buying.
I mean, look at that. That's a classic example. Look how important the background is to knowing key price levels. I mean, we talk about price and volume. I haven't even talked about trigger numbers, but I'll talk about them now. These are areas where, look how many bars we've put up on the daily chart, and we're saying that stuff that happened last year is still relevant, or the beginning of the year, it's still relevant. Mm-hmm. Okay? And what's the date there? 26th of July. Stuff in July, relevant to today. It is. And price action is seen by all these human traders and computer algorithms, and when there's a lot of resistance to price at certain levels, you're going to see it, and as it comes back up there, you're right, you're looking for the reaction. Yeah. If it's going to push through, I always imagine it's like they need the energy. Used a nice word. I look for where the energy is. And that's I've never heard it described like that. You're looking for where the ultra-high volume is. Mm-hmm. That's your first part of your trading day. That's where I really start. Let's look at that. And then I project my lines out and say, are we anywhere near that level? Oh, yeah, we're coming right up to it. And then if it's bullish, like in the Aussie dollar today, never made it above. We'll have a look where it actually went to in a minute. But it pushed up. Let's have a quick look.
Well, before you do,
sure.
Make one last point on this crude. Just looking at the chart like this and how the market's been trading, we obviously have this resistance level across here around whatever it is, 51 and change, right? We're at that point now. We're not seeing an upthrust in here. We're seeing price hold. It's made gains up from these lows. Came up and kind of tested that, kind of got rejected, but didn't make a new low down here. We're back up again to this area. Right now, I'm seeing that we're talking about that high volume, where Abraham was talking about that high volume in the last few days.
Trend alignment to the upside has arrived.
Thank you, Richard. That's really important to keep in mind because that's sort of like the line in the sand. If the market falls through there, we're probably not going to go up higher than this. As long as the market holds there, which I would anticipate it would do, then it will break this resistance. And remember, we talked about wanting to see support and resistance where it's really obvious. This is really obvious. That will be like an attractor, like a magnet to price and bring it right back up into this area. And we have to assess as it goes up there. So if we get this, we know we've got a nice $10,
about $4.
$4 move. Sorry, I'm getting too old with my eyes here. About a $4 move, but that's nice. I mean, think about that. If you're day trading, you want to try to play this to the long side. You're going to have down days maybe on the way up there, but the majority should be to the upside. And when you do have a down day, you're looking the next day for it to turn around and continue on up. So you can use it that way as well. Just some ideas.
Yep. No, great.
Did any of that not make?
Does anyone? Any questions?
Questions. I probably went through that a little quick.
What's being said? Yeah.
I mean, it's really just framing out what the price is doing. And it doesn't matter whether it's gold, crude oil, E-mini S&P.
And considering the volume that you saw in the 15 minute, right? Big mark down, pop up above it. I use the analogy of a ball underwater. You grab a ball. I used to play water polo, so this is why I use it. You grab a ball, you push it underwater, what happens? The second you let go, it pops up. But it doesn't just come up to water level, it pops up over the water, right? I'm looking for that energy. As the market on the 15-minute was marked down, eventually you're going to get that corrective phase. When we started correcting back in, the market popped. Mm-hmm. Now I'm looking for testing where the pop happened. If it's truly strong, you're going to see testing. You'll see another VSA principle. And this comes back to waiting for your bus, waiting for your setup, not getting antsy or anxious or being like, oh, I'm going to miss the bus. And you get into a trade, all of a sudden you lose. It comes down to your level, and you're like, I should have waited. I did that over and over and over and over and over again. So I'm trying to help you guys avoid the pitfalls that I ran into so many times.
The other thing you ought to get yourself over is the idea of having to be right all the time. It's like, that's nonsense. Go back to that crude oil chart just for a second.
Sure. Sorry, I'm just seeing where it ended up. It closed where my entry was. Quite interesting. Crude oil. There you go.
So this is a game plan, right? To go north up into the $56 level, whatever. Okay. Okay. So that's the game plan. So we're going to be looking to go long trades. But what if it doesn't work? Well, we've got a game plan to go. That's a bullish game plan, right? But if the market starts trading down through those levels that we were talking about with the high volume, we know we're wrong. Hey, that's great. That's just as good as being right, because now we have new information that we can use in our trading. We're no longer going to be bullish. We're going to look to the downside. So don't think about being right. Think about creating a plan. Like an army goes into battle, they have a plan of action, but it gets thrown out pretty quickly because things change, right? It's the same thing in the markets, but you need a plan to have a sense of where you're going to go with it, where the market, you think the market's going to go, and then you track it. Is it happening the way I'm anticipating that it would be happening? Try not to predict. Bad idea. Try to anticipate. A little softer. You can maneuver a little bit and not be feeling like you're so locked into, well, it's got to go here, and I'm going to hold on to that trade, come hell or high water.
I totally agree. I mean, this tool was built to make it easy, not easy because trading isn't easy, but to easily identify when everything's in your favour. All right, and here, so if we look at crude oil, and I said to you, and this was open right now, and the market was open, we would be looking for long trades simply because here, 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 and here we're pushing up, and we've been going up for some time, and you've got confirmed shakeout. There it is. You can see up the top there, you see? A confirmed shakeout. It's stopping volume, which is what you said you look for, followed by an immediate test. That's a 3-bar sequence. And that's why crude oil went up. On the 15-minute chart, a confirmed test, and every green bar means the market's going up. I mean, and then when the 5 minutes come in, if these are all green, what you're looking for is successful tests in a green box. If everything's red, then you're looking for weakness. This is not rocket science. We've tried to make it, put Wyckoff in, and what a computer does very well that human beings can't is monitor lots of instruments at once.
And it's no motion.
It's got no motion to it, it's going to say. So basically, in all of that, you can imagine how many charts it's monitoring. So it's, 3, 6, 7 times all of those. And I can add some more to it. I mean, I could add all the futures contracts on the CME exchange and monitor the lot. Every single one.
I guess I knew that, but I'm just thinking, wow, that is really quite impressive.
So as soon as, again, in a live market environment.
Yeah.
Yeah.
I don't trade more than one.
Hey guys, just to be clear, when I was talking about tools, education, training to be a trader, Trade Guide is offering you all of the entire, from A to Z. They got the mentorship courses, they got the VSA Club, they have all the hundreds and thousands of hours of recordings, YouTube. The education's there. The tool is ready to be used. It's a matter of making the decision and allowing somebody who's walked that path before you to show you maybe where you're misstepping, what you're not keeping an eye out for. And ultimately, I think that's what we're trying to create, is that community where maybe I'm short-sighted on the 1 minute, but somebody else is looking on the 5, and I put it out there, hey, I'm interested in taking a short off the 1 minute because of this. Somebody comes in and says, hey, wait a minute, you may want to be careful. I'm looking for the opposite trade because of a bigger time frame. Now all of a sudden you have kind of an army mentality where someone's got your back. You're moving forward. You're trying to attack. You're trying to make money in the market, but you don't know what you don't know. And having somebody there that's helping you and helping guide you, giving you that unbiased opinion, where you cannot have a bias. This has to go up because of this, or this has to go down because of this. You trade what the market tells you. You trade around what the market is indicating, not based off of a gut feeling. But when you're by yourself, trading is a lonely business when you're sitting behind a computer. There's nobody there. You're getting tired or you're getting lazy and you start clicking away just to wake up. That's
oh, let's put 10 lots in. Oh, that woke me up.
Yeah, absolutely. And being able to be in community and having guys that know what they're doing is key to your success. Not having that and trying to endeavor on this on your own.
It's a trade guide of VSA. Wyckoff is a community, and the fact that you've made the effort to be here, and for those guys listening in on the internet as well, this will be a course that we'll put together. The whole thing will all be gelled together, and we'll do some live trading with all of you during the week, either this week, probably next week when I get back. But the only way you can prove to people that what you've got is working is to take the trade and manage a trade. Now, I can tell you, I'll give an example of what happened to me the other day. Some of you may have seen it. I went long, everything was green, and a 1 minute chart was a test. So I went long, I said, that's got to be right. What happened to the test? It failed. And there was stopping volume. They marked it down and bought it lower. And I just looked at it, I said, absolutely right. I should have waited for the test to succeed and then caught the bounce, but it did the opposite. But again, I still learn. I've been doing this for a long time, and I still trade and I make mistakes, and we don't always make money. Some days, not very many, but some days I'll have negative days. Other days, positive days. But cumulatively, you're looking at, all of us want to say, what do you say? If it doesn't make sense, it doesn't make sense. I quite like that.
If it doesn't make sense, it doesn't make sense. If it's not making you money, it's why are you even using it?
Correct.
And that's kind of going back to why are you guys here? I'm sure there's some part of your trade journaling, trade entries, trade management, whatever it is that's not quite clicking yet. And a lot of times you're literally one step. You'd be so surprised how close sometimes people are to seeing a complete turnaround in their trading. But if you don't know what you don't know, if you don't allow somebody else to help you or to open yourself up to, it's not criticism, we're here to help. If you don't open yourself up to that help, how do you ever expect to grow? It's just going to take you that much longer.
Well, Darren Joblin's a good example. I mean, he would Skype me from Afghanistan as they were sending rockets over the literally.
You can hear the bombs.
And he'd be on Skype with me, and he'd say, what his problems are. It was more than decision making. The first thing I said to him, "Where's your trading plan?" And he said, "I haven't got a trading plan." I said, "Well, that's got to be a place to start." I mean, my business partner, I run businesses. We have a business plan. We write down what we expect to do financially for A, B, C, what happens if that doesn't work, what happens if that does work. We've got a new product launch, how are we going to do that? And there's a plan behind it. Fail to plan, plan to fail, really. So it's very, very important. Okay, so one other thing I want to show you here, and then we're going to be here for another hour, and you can come and take us individually. There's still plenty of food left at the back. And if you want to come and ask us some questions, it's informal. That's what we want to do. One thing you can do with this Smart Center Pro that I'm not sure you're aware of, these time frames that we've put in here, okay, are the ones that I decided I wanted to put into the Smart Center Pro. One customer of ours, in fact the first person to buy it, who's actually a fund manager, he said, "Well, Gary, are you going to try something?" And I haven't tried this yet, so I can't say, but I'm going to share it with you because it's important. He says, "Try using a 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, 6 minute, 7 minute chart time frame." I'm like, "What?" He said, "Try it." He didn't say, he said, "Just try it." He said, "And you try it on the currencies when they're moving." He said, half an hour before that London fix, when they're positioning. And just watch when everything aligns on those small time frames, and they test it in an up move, and they're going for the pop. And you know something? I mean, he's telling me, and I trust this guy, that it was very powerful. I will set this up next week, so we'll have a trading session. I'll set it because it's fairly easy to set the time frames, isn't it? On these, yeah, it's very easy if you don't know how. how to do it. So we'll do that next week, and we'll get. I think probably when the following week you're not so busy, we'll do a follow-up session in the live trading area.
Yeah, would you guys like that?
Well, look, just on behalf of the company Trade Guide, I want to thank these guys, obviously, and Lauren for their time. Obviously, we fly them in, we have a great time, and but more importantly, thanks to you people, because without you, we don't have a business, and we're here to help. And we will be following up with you for the live trading session next week. And thank you very much, and let's have a cup of coffee. Cheers. Thank you, everybody on the internet, and we will get this uploaded in the next day or so, and you'll get it. And if you actually check your accounts, you'll see that the live trading sessions that we did are now up there, but we will put the handouts up there as well for you. Okay?
Is Aaron